Alrighty. Good evening, everybody. How's everybody doing? Check lang natin nandito na ba ang ating prayer lead for tonight? The one and only King Tolentino. Are you here, King? Are you already here?
Yes, yes,
Of
Chris.
course you're here. All right, King. Just 1 second. Let's see if we have a quote for the day. I think we have. Great. So time check, it is 6:59. Let me just hit that record button.
Recording in progress.
Okay, why don't you take it away?
Hello. Am I audible? Sorry.
Yes, you are.
Thank you. Good evening, Chris. Good evening, classmates, and all of the peeps and their borderless accountants. So the verse for today that I was what do you call this? Reading my Bible was Romans 5:11, which is, therefore, since we have been justified through faith, we have peace with God through our Lord Jesus Christ. So I'm going to be asking you to please close your eyes, bow your heads in the presence of God. Heavenly Father, we come before you today with grateful hearts. Thank you for the opportunity to be gathered and learn together through this tax preparation class. Lord, we remember your word in Romans 5:11 that we are justified through faith and now have peace with you through Jesus Christ. As we begin, we ask that this same peace guide our hearts and mind. Bless this noble mission led by Chris and the Borderless Accountants as a vision uh, born not for profit, but for purpose. May this initiative continue to empower Filipinos, both accountants and non-accountants, to grow in wisdom, integrity, and service. Also, Lord, help us to see that this class is more than just about numbers or tax forms. It's about building trust, creating opportunities, and uplifting others through financial understanding. Let every lesson we learn here reminds us that the true success is found not only in knowledge, but is using the knowledge of service others with honesty and compassion. Grant us clarity, patience, and the spirit of collaboration as we begin. And may your peace reign over our decisions and discussions, and your purpose shines through us, through every student here. We dedicate this session to you, God. In Jesus' name, we pray. Amen.
Amen. Thank you, King. I appreciate you. And without further ado, let us move on to the next thing for today. Our quote for today to be shared to us by Maritis Saking. Maritis, I believe you're ready.
Hello, Chris. Good evening. Good evening, everyone.
Good evening.
Let me share my screen. Do you see my screen
It
now?
is about to share now. Yes.
Okay. The quote for today is, what is coming is better than what is gone. This powerful quote perfectly captures the journey many of us are on as we step away from our traditional corporate jobs and embrace a new path true borderless accountant. Our past roles gave us experience and stability. To some, maybe possibly limited growth, satisfaction, or flexibility. But now we are choosing to invest in ourselves, to upskill and transition into a career as virtual bookkeepers, preparers, and eventually as enrolled agents. This transition is not just a job change, it's a transformation. It represents better opportunities, the freedom to work from anywhere, the chance to control our time, and the ability to grow professionally in a rapid, evolving digital world. What comes next offers greater flexibility, independence, and fulfillment than what we have left behind. In this new chapter, we are equipped with the knowledge and support from BA community through our mentor Chris, which prepares us to succeed in this dynamic field. So as we move forward, let us carry this mindset that the future holds better possibilities and our willingness to embrace change will lead us to greater success and happiness. Remember, what is coming is better than what is gone. Let this inspire us to push beyond our fear and uncertainty and confidently step into these exciting opportunities ahead. That's all, Chris. And once again, good evening.
Good evening, Marites, and good evening, everybody. Thank you for that sharing, Marites. I believe this is my first time to meet you, Marites, right? We haven't
No,
met.
I led the prayer last Tuesday,
Oh,
maybe.
yeah. My bad. That's why your name is familiar, but again, I'm very bad at remembering people.
Okay.
Marites. Yeah, you did on the 28th,
Twe-
2 days ago,
Tuesday?
right?
Yeah, yeah, yeah.
2 days
It
ago.
was Tuesday.
Right. Thank you. And yeah, indeed, what's coming is better than what is gone. That helps you, you know, not regret the things of the past, right? And just, keep looking forward, right? May mga regrets ba kayo? Share nga. What's your greatest regret in life? Meron ba? Or like, when you're asked that question, does anything come to mind right away? Because if it does, like if something does, and may regret nga kayo. But if kung it takes you a while for you to think of something, then wala. Most likely, right? Kasi ako, I can't think of anything. So, pag transferred ng HS, okay, Juvie has one, right? Ako, I don't know. I can't really think of. I choose to be grateful, I would say, right? Because like things, yeah, they always happen for a reason, right? So it's always, I think, good to just continue to look forward. And again, thank you, Meritus, for that wonderful sharing for tonight. And let's see, do we have a tech tip? Nothing. Do we have a recapper? No one. So let us just go straight to our quiz. Right? Everybody ready? Everybody ready? Si M kahapon, alam ko na kung sino siya. She wants to remain mysterious. So let's respect that. Um, baka mag-top na naman to siya today. All right, so just give me 1 sec. Let me set up my screen. I guess you're seeing it now. And then the link to the quiz is in the chat box. And the pin is 3537. You're listening, King. Ano kayo mga keyboard warrior? Grabe kayo. Good job. Right. Because I don't want to waste time. All right. Looks like we're gonna have a lot of participants tonight. Guys, holiday na ba tomorrow? Are you guys on holiday break tomorrow already? The 31st pa tomorrow, di ba? Or did the
Holiday
government
po
switch the
bukas.
holiday? Sorry, hindi na ako makarelate. Charet. Wala kaming Philippine holiday. US holiday yung pina-follow ng wika. So, holiday na for tomorrow, no? Kasi yung 1 and 2 happens to be a Saturday and Sunday. Good for you guys. So it's gonna be a long weekend, right? So people are probably traveling back home. All right, let's get started. Good luck. Question number 1, what IRS limitation applies to meals? Is it deductible if $100 and above? Is it never deductible? Is it deductible 50% or deductible 100%? So this is meals, business meals. You better get it right. So that's only deductible up to 50% or 50% deductible. Wow, Merry Chris. Good job. Next, how are mixed purpose trips treated? Is it allocated by business days? Is it entire trip deductible? Is it entire trip non-deductible or only transportation is deductible? So mixed purpose, right? Is it entirely deductible or a portion of it only is deductible? Sorry, correct answer is allocated by business days. Good job for the 8 people got it right. Eric is staying on the lead. Aya is on the 4th place. Mel on the 5th place. These are familiar names. What documentation is required for meals over $75? Is it attendee details only? Is it receipt only? Is it business purpose only? Or you need to have the receipt, the time, and the purpose? Right. So you have to have the receipt, the time, and the purpose if the meal is over $75. Right. So Silla is on the lead. Silla is a new name to me. Can personal loans be deducted as bad debts? Personal loans, only if forgiven is yes, no, only if documented. So personal loans yan, guys. So keyword is personal loans and it is never deductible kasi nga po personal. All right, Lani now on the lead. America's showing up on the leaderboard again. Good job. JR2. Under what conditions are bad debts deductible? Is it forgiven debts? Is it bona fide business debts? Is it debts under $500? Or is it because it's personal loans? Right, it's when it's a bona fide business debt. All right, Mary Chris climbing up the ladder again. Good job. What is IRS gift deduction rule? Is it not deductible? Is it $25 per year? Is it $100 per year? Is there no limit? Bilis ng 54 people. So the limit is 25 per year per person, right? All right. What happens without proper deduction documentation? So is it automatic approval? Is it faster processing? Is it disallowance possible or increased refund? So ano daw mangyayari if walang proper documentation? How will the IRS treat that deduction? There could be a possible disallowance, right, from the IRS. And you would know that when you receive the IRS notice or the taxpayer received the tax notice. Right, Lanny's still on the lead. Merrick is following. Good job, you guys. What is the primary goal of tax deductions? Is it to fill forms quickly? Is it to minimize taxable income? Is it to avoid IRS audits? Or is it to maximize refunds illegally? So why do we faithfully and diligently ask for tax deductions? That's to minimize the taxable income of our clients, okay? That's legally as possible. Alma Lynn, showing up on the scoreboard. Good job. And M is on the 5th place again, or is showing up again. Good job. How should personal and business expenses be handled? Personal and business. Is it combined for simplicity? Tamad ka lang? Is it only $1,000 plus separate? Is there such a rule? Personal as business or separate carefully? So what do you do as a bookkeeper? All right, so we should be guided with the separate entity assumption, right? So business is business, personal is personal. Those have to be separated. Next, are engraving and packaging included in gift limit? Is it a no? Is it only for gifts $100 and above? Is it only if over $10? Or is the answer yes? A definitive yes. So the answer there is yes. So it has to be included in the $25 limitation. All right, how many questions? 4 questions down. Lani is now on the lead. Good job, Lani. Why is documentation important for deductions? Because it speeds processing, it reduces tax owed. Is it for no client interviews or to substantiate the expense before the IRS? Okay, that's to substantiate to the IRS. In case there's audit, you can substantiate the claim. Otherwise, it could be disallowed. All right, 3 more questions to go. How are transportation costs for business meals treated? Is it deductible 50%? Is it deductible if over $75? Is it non-deductible or fully deductible? Transportation cost related to business meals, going to and fro the restaurant. All right, it is also 50% deductible. Alma Lynn, going for 3rd place. Good job, Alma. For which expenses is documentation critical? Is it over $75? Only for travel, only $20 or under $20, or only for gifts? So if you see something like this when you're doing bookkeeping, you make sure that it's documented, okay? So that's 49 people got it correct. It has to be over $75. All right. Lani's still on the lead. Last question. What are deductible limits for employee awards? Right, this is kind of hard. So no limit, 100 or 500. Is it 25 per employee, or is it 400 or 1,600? I know this is kind of hard. This is not usual though. I don't usually encounter this. And the answer to that is 400 or 1,600. Good job, you guys. Oh, Lan is on the 1st place. Mary Chris is second place, and Rain De Leon is on the 3rd place. Good job, you guys. Copy only. And let me send that to our chat box. There you go. And let me update our tracker. So today, 10/30, 2025, our leader is Lani, right? All right, good job, Lani. Your name is on the board now. All right, you guys okay? Are you guys okay? Okay naman, Dexter. Um, let me just stretch a little bit. How are you guys? How are you coping? Is everything good? I need to breathe a little bit. Medyo na papalpitate ako sa aking tinake na coffee. um, excited for the weekend? Are you guys excited for the weekend? Excited for the practice returns. Tiwala lang, tayo naman ang akyat sa podium. That's the spirit wing. Yan talaga, di ba? Nakaka-excite naman. Lumalabas yung ating pagka-competitive. Right? Matagal nyo na sigurong tinago yung pagiging competitive nyo, but dito sa PA, lumalabas. Right? And it's a nice feeling. Okay? And for those hindi pa nakikita nila yung name nila sa podium, okay lang naman yun, guys. It's a good indication, di ba? Kasi nakikita niyo naman kung saang place kayo. I don't see it. Like, I have to go to the report for me to see that. But it is a good indication if you're getting it. Hindi nga lang ngayon siguro mabilis, but if you're getting it right, that means the concepts are sticking, right? Nagsistick siya sa mind ba? Right? Hindi naman lahat yan nagsistick talaga. But it's also for your own assessment for your own performance. All right, Arnold, I'm seeing your hand raised. Do you have any questions?
Yeah,
Please go ahead.
please clarification lang. Parang ang question kanina is yung
Mhm.
transportation during meals.
Mhm.
Hindi ba siya 100% deductible? 50 pa rin siya kasama sa meals or?
Ang 100% deductible, as far as I could recall, is yung kapag non-deductible yung meals, right? Like if you traveled somewhere with a client, but if it's transportation to where you're gonna take the client for meals, it's part of the tips, the whatever else that's I would say meron yung exercise natin, di ba, na in-answer yesterday where in-include dun yung transportation, and the transportation was deductible 50% because that transportation was the cost directly attributable to the meal, right? So kung ang transportation is something else other than the meal, then that's 100% deductible.
So ibig sabihin kung hindi deductible si meals,
Mm-hmm.
yung transportation mo is 100% or hindi naman ganon necessarily or
Pag transportation, again, like you brought the client for maybe going to a showroom, for example, that could be 100% deductible. But if it relates to the meals, like ang purpose nilang talaga is to go to the restaurant, then that is part of the meals expense. Pati parking, diba? Yung
pati tips. So
Yeah,
so included as 50% deductible lang.
correct.
All right, thank you.
No problem at all. Thank you, Arnold. Eleanor has a question too. Go ahead.
Chris, with regards sa yung sa engraving sa gifts.
Mm-hmm.
Parang kasi last night kasi parang separate siya.
It's a
If I
gift limit
remember
ng
it correctly.
$25.
Yes. Parang $4 is, yung example kagabi is $4 yung engraving,
Mm-hmm.
separate siya sa 25.
Okay. Try nyo nga i-validate. Is gift limit $25, is the engraving included or separate? Okay, the $25 gift limit does not include incidental costs such as engraving, packing, or shipping as long as they do not add substantial value to the gift. This means the engraving is considered separate from the $25 limit for the gift itself and can be deducted in addition to the $25 for the gift. Yeah, sorry, that was my bad. So it is excluded, subject to the $4 limitation. Thank you for the clarification, Eleanor. All right. Anything else? My clarification. So clarify natin yun guys para hindi kayo malito. The engravings, packing or shipping, as long as they do not add substantial value to the gift, they are excluded from the $25 limitation. I think yung kahapon yung example was promotional item. Like for example, you're providing mugs, for example, sa mga clients nyo, Christmas token maybe. So if the mug itself is $25 and then pina-engrave nyo yung company name, that engraving cost is on top of the $25, and that could be a deduction to a business expense. Right. Tandaan nyo lang to for exam purposes. In real life though, in real practice, I have not encountered this thing, right? But it's a good to know if you're going to take the exam, because it could be part of the question, right? And this is again, if you notice, there's a lot of discussion on business expenses, and this pretty much benefits the bookkeepers, guys. This benefits the bookkeepers on what to include in the expenses, in the profit and loss statement of the books, right, or of the client, because as tax preparers, all we need to do is actually determine if the expense is includable or not, right? So, when we're given the financials, it's already summarized, right? Like meals, for example, it's one line item. Gifts, for example, is one line item, right? So, as tax accountants, if we feel the need to, I love you guys. Wala pala tayong co-host. So is Kelly here already?
Yung mayor ng Maynila
Please,
dati yan
can
eh.
you make me a
Yun yun.
Make
Ay,
co-host.
ito,
Kelly
ito.
Long, if you could just
Mayor ng
kindly
Maynila yan, dati.
pull more up.
Oo.
Hello, pa-off na mic.
Right. I already have you as co-host, Kelly. If you can just kindly do, yeah, thank you very much. So what I'm saying is that in practice, if you're doing purely tax preparation, we're given already summary of the expenses. But when we see that expenses are, we have some doubts about the expenses, that's when we ask the bookkeeper to provide us, say for example, the general ledger, right? Let's say nakita mo dun gifts, ang laki, ang napaka-substantial nung amount, right? So you may want to dig further, right? That's part of our due diligence as tax preparers. And meals, again, and all other expenses that, again, you feel are subject to verification, then you need to coordinate with the bookkeeper or the accountant, or minsan din yung client na mismo. Depende sa arrangement mo with the taxpayer. So minsan, taxpayer yung kausap natin, and then yung taxpayer na yung magtatanong sa bookkeeper. Minsan naman, yung taxpayer sasabihin, reach out to my bookkeeper or to my accountant, sa kanya ka magtanong kasi hindi ko alam yung sagot sa mga questions mo. And that usually cause the delay of the preparation of the return, right? Yun yung back and forth communication between the client and between the taxpayer or bookkeeper and the tax preparer. Kaya madalas, kapag may business return, hindi yan agad-agad na na-file, right? Lalo na pag malaki ang maraming activities yung client. And that's also why usually pag business returns, mas expensive talaga. Kasi again, there's a lot of back and forth between the bookkeeper or taxpayer and then the tax preparer. And then also when you're preparing personal return, kapag meron na yung Schedule C, Schedule E, medyo pricey na rin yung engagement fee, right? Because mas tedious yung work or yung work involved. Alrighty. Any more question? Are we all good? All Alright, sabi dito, meal expense 50% transportation expense to and from the meal, Uber, mileage, gas, parking, 100% deductible. Transportation is considered a separate business expense, not part of the meal. If you travel solely for business purposes, it's fully deductible as a travel or auto expense. Right. Ano ba to perplexity? ChatGPT. The 20 volume does not apply to incidental advertising, item cost, a giver, or more than $4. Okay. Right. So transportation, i-validate nga natin yan because we don't want to mislead you guys. Meals 50%, tips 50%, transfer 100%. Yeah. May notes talaga si Mary Chris. Oh. Good job, Mary Chris. All right. So I stand corrected. Expenses related to transportation is 100% deductible. Right. Thank you guys for validating that. But let me share one last time. Check natin sa Blue Jay. One last time, para lang clear tayo. 7:30 pa naman. Kasi minsan mga AI din, mali-mali ang binibigay. But let's see with Blue Jay. I'll share with you my screen. So whenever we're doing tax research, we rely with this AI. Oh shoot. Kita niyo ba yung screen ko? Oh my God. Is transportation related to meals 100% deductible or subject to the 50% limitation? So unlike Perplexity or ChatGPT, medyo mabagal magbigay ng answer si Blue Jay. Just because naglalagay siya ng mga sources niya. And Blue Jay is medyo pricey. And this one is really dedicated for tax preparation or tax related questions. All right. So tingnan niyo magbigay siya. Meron siya mga sources ng provisions ng law. So transportation costs related to meals, such as cab, fare, parking, or mileage incurred to travel to and from a restaurant or other location for a business meal, are not subject to 50% limitation on meal deduction. Instead, these transportation expenses are fully deductible as ordinary and necessary business expenses, provided they otherwise qualify under IRC 162. All right, so I think that settles it. So if you take a client to do dinner and pay $100 for the meal, including tax and tip, and $25 for cab fare to and from the restaurant, you may deduct $50 for the meal, but you may deduct the full $25 for the cab fare. Okay, so it was me who misunderstood what I read earlier when I was preparing the quiz. My bad. So again, that settles it. So, okay. Anyone else? Meron pang ibang clarification para masettle natin. And we can, hindi tayo magkapag-mislead kasi kayo mag-i-exam pa kayo. Can ProConnect auto compute for transpo? Maybe we can input in the software. transportation is walang provision ata ang ProConnect for transportation. For meals, it has to be kung bookkeeper kayo, I think you will have to have a different line item for transportation. So walang separate provision sa ProConnect for transportation. It's just one line item. It isn't other expenses. All right. Rain, one mistake ka na lang. Or perfect ka na. Back to one mistake. Right. Good job. All righty. Thank you for all the clarification. Let us now continue if wala na, if you're already good. So congrats sa mga na perfect, but we're not changing the result of the quiz. Manghirap na additional work na yun sa akin, guys. Right? So but it's good, right? That you give feedback on the quiz result or the quiz material, so we can always correct ourselves. Okay, so all good tayo. Let us now continue with our lesson proper. I'm just gonna share my audio. Or wait lang, I'm sorry. I'm sharing you guys the wider screen and it, or I think that's okay. Just one sec, let me share again. All right, so day 9 tayo of our business tax prep course. And so far we have already covered entity types, income and farms, rental property and loss limitation, business expenses, and then a portion of other deductions. Yesterday we completed up until subtopic business gifts. And now we're going to continue with other business expenses, business use of home, statutory employee or non-employees, and then QBID. All right. So let's watch this.
There are a few other business expenses we should cover, so let's review. Depreciation is a deduction for the obsolescence or wear and tear of property used in a trade or business. While often discussed in the context of corporations, it applies to any business. If you purchase a piece of machinery for your business, you can deduct a portion of its cost each year over its useful life. Startup costs and organizational costs are generally capitalized and amortized over 180 months, which is 15 years, starting from the date the business begins. These include expenses to create or investigate a business. If not already in business, costs must be capitalized and amortized only if the business is actually entered into. If the business is already in existence, costs can be deducted or amortized regardless of entering the new business. Organizational costs are direct costs related to creating a corporation or partnership. They are amortized over the entity's life and must be incurred before the first tax year ends. Up to $5,000 of startup costs and $5,000 of organizational costs can be deducted in the first year. The $5,000 limit is reduced by costs exceeding $50,000. So for example, if you spend $6,000 on startup costs, you can deduct $5,000 in the first year and amortize the remaining $1,000 over 15 years.
Right. This is common, guys, yung startup or organizational cost. Usually kasi, diba, yung mga startup, they don't have a bookkeeper yet. And marami ako nakakita sa Upwork, yung naghahanap ng bookkeepers for startup companies. This is one thing you would want to know, the startup or organizational cost that they can only deduct in their tax return up to $5,000. of expense, and then the remaining would have to be amortized, right? Hindi lahat pwedeng i-deduct as an expense one time during the first year.
Interest and taxes on vacant land are deductible. Note, demolition costs, undepreciated basis, and any losses are not deductible, but are actually allocated to the land. A loss is deductible in the year assets are abandoned with no claim for reimbursement based on the adjusted basis. Cost of goods sold, or COGS for short,
Right, balikan na natin.
note demolition.
So for depreciation, there's also very common deduction, right? This one is read as makers. And for Filipinos, hindi tayo familiar dito because this is peculiar to the IRS. So makers or for any other depreciation, you don't have to compute for it because the IRS or the software will actually do it for you. So let's just do a quick demonstration of inputting depreciation and how it works. And then one thing you need to also know about depreciation is yung concept of Section 179, bonus depreciation. And I remember, I think it was Jeng who asked that question the last time. There are qualifications for Section 179 and bonus depreciation. It depends on the asset. So you'll have to look it up online. What are those assets that are qualified? Most naman qualified, especially if it has to be depreciated over 5 years and above. Pag vehicles, medyo tricky pag vehicles because may kailangan ng tonnage na requirement. Is this still visible to you guys? I know I'm using kasi the wider screen. Is this good for you? Nakikita pa, nababasa niyo pa naman yung mga fonts. Right. So if you're preparing a tax return, whether it's Schedule C, 1120S, or 1065, and you're entering depreciation, di nyo dapat sila ino-override. Okay? Override meaning you're inputting it you're hard coding the depreciation amount. So for example, since I'm using a 1040 return as an example, when you go to the income statement for a Schedule C, there's a provision for depreciation over here. Here. So these are all overrides. When I say override, that means you are hard coding the amounts. And we rarely do it. We rarely really do it because that will mess up the depreciation or the Form 4562, right? And whenever a new taxpayer engage you for a tax preparation and marami siyang fixed asset, you must always ask for the Form 4562 or the depreciation schedule. Kasi marami na ako na-encounter na yung Form 562 is missing. Kasi pag nag-preprint ang firm, hindi nila sinasali yung 4562 kasi like they're assuming na the following year is magiging client pa din naman yung taxpayer. Kasi again, same tax software, pag ni-roll over yan to the following year, all of the fixed assets, the depreciation schedule will roll forward then. However, if the taxpayer decide to switch to another preparer the following year, right? And it happens na ikaw yung preparer na yan, the first thing you need to really do is to scan through the tax return, yung PDF na tax return. So for example, tax year 2025, ikaw na yung mag-prepare. You will always ask for the prior year return, which is a 2024. And you will scan through the return. And then if you see that there is a depreciation expense on the Schedule C, 1120S, or 1065, automatic look for the Form 4562 and check if it is available in the PDF copy that was provided to you by the client. Otherwise, ask for it. The taxpayer can go back to the old preparer or the previous preparer and ask for it. You must always ask it because that's how you will get the list of fixed assets. Even if they're already fully depreciated, you still have to input that in the tax return that you will be preparing. Okay, so here again, best practice, or actually it must be a practice to not override this because the system will calculate the depreciation for you. And I'll prove that to you. So right now, we will just check this return. Let me see if I've already inputted a fixed asset here. So when you're using a tax software na may mga override yung description ng field, be very cautious already, okay? Do not use it only when you're at, you run out of options, right? But if you can find a way to not override it, don't. So I think we have a schedule 4562. So you saw earlier, I did not put any number on a depreciation, right? But if I go to my schedule C right here, you can see that I have a depreciation expense of 34,000, right? Because I entered something in the fixed asset register for this taxpayer. So where do you go to input depreciation? So keyword na lang, if you see override, there must be a specific form where you need to fill out for that specific field, right? That's your clue. So depreciation override. So that tells you, oh wait, I will not be entering the numbers here. I will be entering it somewhere else. So now you go to deductions, and under deductions, you see here depreciation. So for depreciation, you will have to fill this out and then make sure that you are specifying the form, because it could be in Schedule E, Schedule C, and then if you have multiple Schedule Cs, you have to also specify which activity that relates to. And then category, just check from the drop down. I'm using equipment as an example. And then you would also need this information, the date it was placed in service. So let's say it was placed middle of the year, last year. And then the cost of the basis, this is what you would also obtain from the taxpayer. Usually you would also get it from the general ledger as a supporting document of the balance sheet. And then section 179, if it qualifies, right? Most of the time, this is automatic. The system will determine if this asset is qualified for a section 179 deduction. Excuse me. You don't have to put anything here. And then the method, this is what you will choose, right? So this is the makers. So say I delete that. And then on the drop down, you just have to look for the most appropriate depreciation method that applies to the asset. And sometimes you will have to use ChatGPT or any other AI for that matter. So for equipment, and let's say, for example, this equipment is for office because my business is a translator, consulting services, something. So the closest thing I could see here is 53 makers, 5 years, office equipment, rental, furniture, and fixtures, right? So I select that, and then that would automatically, if I don't select this, right? If I don't select that, for example, if I go back to my return, the system will not calculate for any depreciation yet, right? Or it may, but it may just do the section 179. All right, it did not. So no depreciation, right? Because we did not select for the depreciation method. So, but we have an income of 50,000. So the entire 50,000 was, so no deduction for that, for this particular Schedule C. So we want to go back here and we just make sure that we need to fill out the method, right? So makers, here. And when you're in doubt, right? Like if it's a new asset that was bought during the year that you're preparing the tax return for, just look for AI. Ask AI what best to what method is appropriate to use for this particular asset. And if it's already in the form 4562, it will be indicated there. So just copy it. So now that we fill that out, we go back to our return. And then first we'll go to form 4562. 4562 is the depreciation schedule. See? So 30,000 for the asset. It allowed for a section 179 of 20,000. Sorry. No, the 50,000 new asset, diba? So 30,000 for section 179, and then the remaining 20,000 was depreciated. Half-year convention, double declining for 4,000. So again, the point of this demonstration is for you to understand that depreciation is already calculated by the software. So you just need to know where to input it, what to input, and what information you need, right? So you would need the nature of the asset, the date it was entered into the business, the historical cost of the purchase cost of that asset, right? And the method to use. So if you go back to 1040, your Schedule C, that depreciation of 34,000 is reflected right there. Okay, so that's just a short demonstration of depreciation, because amongst the ones that are listed here, depreciation is the most common expense. Okay, one of the most common.
Demolition costs, undepreciated basis, and any losses are not deductible, but are actually allocated to the land. A loss is deductible in the year assets are abandoned with no claim for reimbursement based on the adjusted basis. Cost of goods sold, or COGS for short, reduces revenue before...
All right. So just on the abandoned assets, one reason why you would want the asset to be listed on the form 4562, even if it's fully depreciated, is when you're abandoning the asset or disposing the asset. So you'll have to mark one on the year that it is abandoned or disposed, maybe sold for a certain amount. You'll have to label that asset as disposed, right? So that if there's any gain or loss in the disposal, the software will calculate for it.
Inclusion in gross income. For medical reimbursement plans, the cost such as of such plans for employees is deductible by the employer. Contributions to political parties or candidates and most lobbying expenses are not deductible. Up to $2,000 of direct lobbying costs at the state or federal level is deductible, excluding payments to professional lobbyists. Payments of another party's debt is generally not deductible unless required by a legal obligation or business necessity. The cost of intangibles are not expensed, but must generally be capitalized and amortized if they have a determinable useful life, typically over 15 years for Section 197 intangibles. Expenses related to producing tax-exempt income are not deductible. Certain ordinary necessary...
So what are the most common tax-exempt income? It's municipal bonds, right? Anything that you see that was sourced, sa US kasi, their municipalities, even their state, they have their own, that's their own tax jurisdiction, right? So they have a way on how they can, kasi federal setup sila, di ba? So they have a way to raise funds for whatever purpose they deem necessary. So municipalities, they can issue munis ang tawag doon. Kapag municipal bonds, the abbreviation for that is munis. Right? If you say munis, meron pa din naman yan sa 1099B, 1099 INT. So it would show there how much was the interest on that municipal bonds, and any investment expenses related to that bonds is not deductible. Kasi nga yung income non-taxable already, right? So hindi rin siya deductible yung related expenses.
And reasonable business expenses are non-deductible, such as fines, penalties, illegal bribes, and expenses of illegal drug dealers.
Yeah, ito din, mga fines, penalties. So if may makakita kayo na pag nagbo-bookkeeping kayo, fines such as mga traffic violation, diba, which is common, those are non-deductible. Okay, and then penalties, mga late payment penalties for paying, late business taxes, those are also not deductible.
Employer business move expenses are deductible. Employee moving expenses are generally not deductible, except for active duty military. Research or experimental costs must be capitalized and amortized over 5 years.
So moving expenses, you may also encounter this a lot because prior to 2018, yung moving expenses, meaning like naglipat bahay yung taxpayer, that moving expense prior to 2018 is deductible. So mga tao, akala nila pwede pa rin. But after 2018, hindi na siya allowed, right? Moving expenses are no longer allowed unless you are in the military, right? So pag military ka, most of them, they move to like North Carolina. So anywhere you are in the US, if you move because of military related deployment, then that expense is deductible. Other than that, it's not deductible. So you should answer your prospect line that any moving expense, unless you're part of the military or it's for military reasons, are not deductible. Okay.
Dealers. Employer business move expenses are deductible. Employee moving expenses are generally not deductible, except for active duty military.
So employee yung sinasabi ko ha, employee. Pag employer ka, that's deductible. But employee, meaning you're a W-2 or an income earner, that is not deductible.
Military. Research or experimental costs must be capitalized and amortized over 5 years, 15 years if that research was conducted in a foreign jurisdiction. Environmental cleanup costs, well, these costs are treated as land and capitalized. So the trick we're seeing is that if it relates to land, probably need to capitalize and cannot expense. Ordinary and necessary business expenses like office supplies, advertising, and professional fees are deductible. Sometimes companies make a strategic decision to breach a contract. Penalties for late performance or simply non-performance of a contract are generally deductible. Up to $15,000 can be deducted annually for making facilities accessible. Excess costs can be added to the property basis and then depreciated. A tax credit is available for small businesses. Sole proprietorships, S corporation shareholders, and partners can deduct charitable contributions on Schedule A of Form 1040. Costs of acquiring, issuing, or renewing a government-granted license must be amortized. A statutory employee's business expenses are deductible on Schedule C of Form 1040. They are only an employee based on the definition in the statute, hence statutory employee. All right, self-rentals. The amount of a loss or credit attributable to a person's passive activities is allowable against income or tax from those passive activities. If you rent property to a business in which you materially participate, net rental income is non-passive. This means rental income from self-rented property cannot be used to offset passive losses on Form 8582. Self-rental losses are passive and deductible only to the extent of passive income. Income is reported on Schedule E, but not as passive income on Form 8582. So if you rent a building to your own business and earn $10,000 in rental income, this income is non-passive and cannot offset with passive losses. And finally, self-employed taxpayers can deduct their own education expenses on Schedule C as an other business deduction. The education must maintain or improve skills used in the trade or business or be necessary to keep a job, their status, or rate of pay under applicable law or regulations. Expenses to meet minimum requirements for a trade or profession or to qualify for a new trade or profession are not deductible. So, for example, if you are a self-employed graphic designer and take a course to learn new design software, you can deduct the cost of the course as a business expense. Whew. All right, well, that's our sundry list of business expenses. Thanks for watching. Tina owns a car dealership. Her books and records reflect the following items for the current year. So we have a number of current items. My test-taking strategy is let's go to the question first before we read through these items, okay? So we know what we're looking for. What is the amount Tina can deduct on her income tax return for the current year? So what's deductible? That's what we're...
I think you guys can make a computation here. So what she can deduct, she owns a car dealership. So first is the reserve for anticipated expenses associated with service contracts sold in the current year. That's 10,000. Direct expenses paid in an attempt to influence legislation of the local city council. Expenses paid for admission to an inaugural ball for a candidate for mayor. Cost to demolish a building used in her business, and undepreciated basis of undemolished building. So which one of those are deductible for the current year?
Trying to figure out. Okay. Item 1, reserve for anticipated expenses associated with service contracts sold in the current year. Anytime you see this word reserve, it is just not deductible until it becomes actual bad debt and the client has that issue where they actually lose economically speaking. Here, this reserve for anticipated expenses, just flat not deductible. Direct expenses paid in an attempt to influence legislation of the local city council. Now that sounds like lobbying to me. And with lobbying, there's a special carve out of up to $2,000. All right, so this $1,000 looks okay so far. Just a very small special carve out there for kind of de minimis lobbying expenses related to a business. And in this case, we see that's the interpretation. Okay, expenses paid for admission to an inaugural ball for a candidate for a mayor. She kind of got something out of that. So that is not deductible because she got the admission there to the ball. Cost to demolish a building used in her business, and then undepreciated basis of the demolished building. Those aren't deductible either. Those would need to be potentially capitalized into whatever is constructed in its place for that building. So as we read through this, the answer is actually only $1,000 for what is potentially deductible there for you. This comes up a lot in practice where you got to kind of watch what are the numbers that the clients are giving me for, and I'm air quoting here with my fingers, expenses. And that's why the detail ends up being really important. So for us, we go through. The true root of this question is, did you know that there is a special exception of up to $2,000 of lobbying expenses with respect to legislation of direct interest to the taxpayer? And that's what we see here. So we get the full $1,000. It's up to $2,000. So A is our answer. With regard to other business expenses for the current tax year, all of the following statements are true except,
okay, try to apply your understanding here first. So with regard to other business expenses for the current tax year, all of the following are true except, so we're looking for the false statement. So A is reimbursements a taxpayer makes to job candidates for transportation or other expenses related to interviews for possible employment are deductible business expenses. Social naman to. Nagpa-reimburse siya sa mga job candidates. Legal fees paid, I wish that's the case for us, right? Legal fees paid to acquire a new office building are ordinary and necessary expenses directly related to operating a business and are deductible as business expenses. Sounds like it. A taxpayer may deduct his or her own education expenses, including certain related travel that is related to their trade or business. All right. Let's see.
Okay, so which one is the exception? A, reimbursements a taxpayer makes to job candidates for transportation or other expenses related to interviews for possible employment are deductible business expenses. That's true. You actually can take that deduction for reimbursements. That's just kind of a cost of trying to find talented folks to work for you. B, legal fees paid to acquire a new office building are ordinary and necessary expenses directly related to operating a business and are deductible as business expenses. This is related to real estate, right? Trying to acquire a new office building. I probably, right, because it's a cost of acquisition, before I can start functionally using that asset, that sounds like I might need to capitalize that into the cost of my building and depreciate that over time. So I'm going to put an X there, but let's read through C and D just for completeness. C says a taxpayer may deduct his or her own education expenses, including certain related travel that is related to their trade or business. That's actually true. And as an enrolled agent, when you achieve your credentials, you will need to have continuing education in order to maintain your credentials. I obtain mine in all sorts of different ways. Gleim actually has an awesome catalog of continuing education that's available. So I know that one quite personally well, that it's definitely one that would fall out as an exception. And then obviously D can't be there as well because we just reasoned through A and C. So yes, B is the correct answer. That would be the exception, that it is not deductible in as an expense in the ordinary year. You would have to capitalize that cost.
Right. So B has to be capitalized and then become part of the depreciation expense.
Many businesses operate with a home office. Let's take a look at the tax rules for business use of home office. Expenses incurred for the use of a person's home for business purposes are deductible only if strict requirements are met. The portion of the home must be used exclusively and regularly as 1. The principal place of business for any trade or business of the taxpayer. 2. A place of business used by patients, clients, or customers in the normal course of the taxpayer's trade or business. Or 3. A separate structure not attached to the dwelling unit that is used in the taxpayer's trade or business. If the taxpayer is an employee, the business use of the home is not deductible. If, for example, you use a room in your home exclusively as your main office for your consulting business, you may qualify for the home office deduction. Any personal use of the business portion of the home by anyone results in complete disallowance of the deductions. There are 2 exceptions to the exclusive use test for a retail wholesaler or daycare. So if you run a daycare business from your home, you can still qualify for the home office deduction, even if the space is not used exclusively for business. A taxpayer's deduction of otherwise non-deductible expenses, such as insurance, utilities, depreciation, those are all limited to gross income derived from the use, minus deductions related to the home, allowed regardless of business or personal use, such as mortgage interest or taxes. Those deductions are allocable to the trade or business for which the home office is used that are not home office expenses.
Right.
So-
So just few notes here. When you say business use of home, it has to be exclusive, right? So if the taxpayer has multiple rooms in his house, then one room is dedicated for home office, which is very, very common for self-employed individuals. And that room has to be exclusively used. Hindi siya pwedeng mixed use. May personal at saka may business use, right? Ang daycare naman, in the US, there's very common for someone to take kids, for daycare when their parents are working during the daytime. So if you're in that type of business, you're an exception. If retail or wholesaler ka naman, like Amazon seller, for example, a portion of your house can be used as a storage of the inventory items that you sell, right? So if that is your type of business, the exclusive rule does not apply to you.
So, employee compensation. Let's say your home office generates $10,000 in gross income and you have $3,000 in mortgage interest and $2,000 in utilities. Your home office deduction is limited to $5,000. Now, this would mean all receipts must be kept for these items, which could be very challenging for some clients. A new simplified option allows taxpayers to claim $5 per square foot of home office space up to 300 square feet for a maximum deduction of $1,500. If your home office is 200 square feet, you could claim a deduction of $1,000, which is 200 square feet at $5 per square foot. Well, we are at the end of this Home Sweet Home section. Thanks for watching.
All right. Before we proceed with the questionnaires, I would just like to emphasize some things here because home office is also very, very common in preparing tax returns. So how to go about the simplified deduction, right? So simplified means whatever is the home office space multiply by $5, right? And there's a maximum of 1,500 if that option is used. So where would you go to fill out the home office deduction for Schedule C? Home office still applies for S Corp. For home office S Corp, that would be part of an accountable plan, which we will cover when we reach S Corp as a topic. For partners, that would be UPE, unreimbursed partner expenses. But for self-employed individual, you have to go here under deductions, business use of home, and you got to fill this out with the necessary information. So make sure that it's attached or linked to the Schedule C and that particular activity on that Schedule C. And then you fill out the business use area, the total square footage. This is part of the tax organizer that the client fills out. And then if you want to elect for the simplified method, you have to use this section right here. One is use the actual expenses, and the other is to elect simplified method. So if you put 2 here, that means you are adopting the simplified method. And when you do that and you go to your Schedule C, that deduction will be towards the bottom part of the Schedule C. So just go here and then go to your Schedule C. And you will see that deduction here. So expenses for business use of home, 1,500 is the total square footage of the house, and then 300 is for the business use. So that's 1,500 because 300 multiplied by $5. That's a standard deduction, right? What if there was more than 300, right? Let's just use this for demonstration. Let's say there was 500 in square footage, right? So if that is the case, would you have more than 1,500 of deduction? Let's find that out. So even if you have 500 in square footage, the system only allowed 300 here. So the deduction never changed, 1,500. What if it was less than 300? So let's do 200. So let's do 200 here. Sorry. Sorry, Schedule C. Oh my God. So you have 1,000, right? So the maximum is 1,500, or it can be lower than that. And then let's see. Another thing you ought to know is that the home office cannot further reduce a loss in the Schedule C business, right? So let us change our income for our Schedule C. Earlier we had, I think, 50,000, right? So if our depreciation is already at 34,000, if our income is less than 34,000, then we'd be incurring a loss, right? So let's say this is 30,000. That's a gross receipts, right? So let's see what happens. Right. So 30,000 gross receipt, depreciation pa lang 34K already. So you have a loss of 4,000 so far. Look at what happens. It does not recognize any further loss, right? Because any home office expenses cannot further reduce a loss, or cannot further, cannot add up to a loss, right? And then what if you want to go for actual use, right? Actual expenses. So what you're gonna do is just go here under deductions. Where is that? Home office, right? So in here, use actual expenses, which is the default. So if you don't put anything in here, it's gonna default to actual expenses, right? So we can put either one or none. So if we use none, we'll have to fill out the two portions of the expenses. One portion here is indirect expenses. So non-business portion will carry to Schedule A, right? So non-business portion will carry to Schedule A. So if our let's go back here. So let's go back to the 300 example. So 300 over 1.5, that's about 20%, right? So what happened here is that if it's indirect expenses, it will only take 20% of all the expenses that you're going to be inputting here, right? Now, on further down is business percentage will not be applied. These are direct expenses, see? Direct expenses. So whatever you put here, this is going to be 100% business, right? 100% business, no allocation, right? Like, for example, you had your home office repaired, right? So that's directly attributable to your business. So that's 100% deductible. Utilities, for example, if you have a separate internet connection dedicated for your home office, then that could be 100% deductible. So where would you see that on the form? Right. Where would you see that on the form? It's in here. Right. So in the form, there is a calculation of the percentage of the home office. So that's 300 over 1.5. So that means 20%. You have a separate section for direct expenses, the 1.5 for repairs, 500 for utilities, and then for indirect, you have 10,000 for the mortgage, and then 2,000 for insurance, 3,000 for utilities. So there's a computation here. So what's carried forward to the business expense is 2,000 because that's 20% of 10,000. And then for the 2 and 3, which is a total of 5, only 1,000 was carried forward. And then 1.5 and 500 for the direct, 2,000. So total of 3,000. Therefore, you have 2,000 and 3,000, a total of, it should be a total of 5,000. But because you're a loss, the operating expenses that will be carried forward for the following year is 3,000. That relates to the direct expenses, right? The direct and indirect expenses. The one for the mortgage was not allowed as a carryover. And if you go back to your Schedule C, you're allowed a deduction of 2,000, which further increase your loss to 6,000. Only the 2,000, guys. Where is that 2,000? Again, it's for the mortgage of 10,000. But if you had a gain, for example, a profit. So let's switch this to an income position, for example. When you start preparing taxes and you use different tax software, it usually doesn't work this way. It takes a while for ProConnect to load the page because it's web-based, right? But it's pretty faster if you use other software. So you don't have to like switch from input to form view. So Lessert, for example, has this ability where you have the input view in one window and then the form view in another window. So you don't have to go back and forth. But we cannot complain. This is free. So we have to deal with it. So 50,000, you have 34,000 in depreciation. So you have 16,000 tentative profit. So the entire 5,000 is deducted, right? So you come up with a taxable income of 11,000. Now, that's why you have to really ask for home office. Yeah, it helps reduce the taxable income of the taxpayer. If you don't ask about this, you're missing an opportunity for the taxpayer to save on taxes. And it happens a lot, guys. It happens a lot, right? That's why, most complaint of taxpayers is that why do I pay huge amount of taxes, right? And when they feel that, that's when they look for another tax preparer because they feel like their tax preparer is not giving them tax strategies, right? And it's very, very common because a lot of tax preparers are just tax preparers, right? They are not knowledgeable about tax strategies or tax savings mechanism. And that's what we want for you. We want for you to have an edge when you go out there, and you're not just an ordinary tax preparer, that you know how to save taxes legally for your clients, okay? And when you apply, that's also your edge. Never fail to mention that. When you're applying for a job, you are going to say, well, I have learned tax preparation, and more than that, I also are knowledgeable with ways on how to save the taxpayer money, right? By making sure that all the possible deductions are maximized. One of that is home office, another is mileage, and blah 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 blah, right? And when someone is interviewing you and you know these things, there is a really high chance that you can get hired. So that's it, right? 11,000 of income because you had 5,000 of home office deductions. If you miss this, that's a lot of missed opportunity. All right, so that's just it for home office. You will learn more, right? Hindi naman lahat mas makikwento ko sa inyo here. Otherwise, we're gonna be here for a very long time. And also, this is why you would want to learn from borderless accountants, right? Because if you learn it from just in the enrolled agent material and not really having the visibility of how it works in the tax form and real world scenarios, you may be missing a lot, right? So that's what we do, right? Again, I go back. We teach you the why and the how, right? And even infuse some real life strategies and scenarios so that you're equipped, right? And I envy you, actually. I wish I have the same training that you're having now. Right? I never had one. Anyways.
Which of the following is a
Yeah. You had to record the home office in the books for a partnership LLC by a couple. It's not in the books, right? Joanne, to answer your question, it's not in the books. The home office is not in the books. It's going to be in the tax return, and it can just be a note. It can just be a note, or it can be sent to you. If you're the bookkeeper, the home office can be an adjusting entry that will be provided to you by the tax preparer. Okay? So it's the other way around. Yung tax preparer yung magbibigay sa iyo ng AGE for you to input that in the books. All right, Marcus, when we graduate in BA in time, we will become a tax strategist. Why not, right? Why not? I'm excited for you guys to become tax strategists too. In fact, basta, marami akong gustong i-share, kaso nga lang, we have limited time. Anyways, MCQ tayo.
Which of the following is a true statement about the exclusive use test for business use of a home? Is it A, generally any personal use of the business portion?
Consideran muna natin to. So which of the following is a true statement about the exclusive use test for business use of home? A, generally any personal use of the business portion of the home by anyone results in complete disallowance of the deductions. Or is it B, a retailer must meet the exclusive use test? Or a daycare must meet the exclusive use test? Or a wholesaler must meet the exclusive use test? Which of the following statements are incorrect? All right, let's continue because I think a lot of you got the correct answer already.
Of the home by anyone results in complete disallowance of the deductions. That sounds pretty powerful. Let's read through the other ones. B, a retailer must meet the exclusive use test. C, a daycare must meet the exclusive use test. Or D, a wholesaler must meet the exclusive use test. So B, C, and D seem to be fairly pointed to one particular industry, whereas A is a pretty broad and powerful statement. A is actually our correct answer. There are two exceptions to the exclusive use test for a retailer, wholesaler, and then a daycare. So that's why we're going to see B, C, and D kind of fall out there. And backing into this, yeah, A is absolutely the correct answer. The exclusive use test is very, very powerful for personal usage. I've seen this a lot in practice as well. That exclusive use it's a hard criteria to meet. But the other ones, reasoning through where do you store your inventory, how do you sell to your clients, and then finally daycare. My goodness, kids are everywhere. If you have them, you can sympathize as well. So A is the correct answer. That's the general criteria, is that any personal use, that business use of home deduction is pretty much gone. So we'll pick A and move on to the next one. The following information is for a taxpayer that met the requirements for deducting expenses for the business use of 20% of the taxpayer's home. So we've got a pretty good chunk of information. Ultimate question is, well, how much depreciation is allowed for the current year? And when you talk about the home business use of home, the important criteria to remember is that it cannot create a loss for you. It can take you to zero, but it generally can't take you to a loss, particularly when we get to the final piece. And it's actually listed last here as well, which is depreciation. So we will start with the gross income for the business, $6,000. That's our starting point. Now we can't get below zero, particularly when we add depreciation. The other piece that I want to point out here is that the home mortgage interest, business expenses not related to use of the home, business phones, supplies, depreciation on equipment, and then finally, maintenance, insurance, and utilities. Now, those are the three pieces, but this category in particular, this $2,000, it is business expenses. Now, they tell you 20% of the taxpayer's home because only 20% of my mortgage interest is technically then a mortgage interest in real estate taxes would technically then be associated with my business. So we want 20% of our $15,000. So let's do the math on a calculator just to make sure. That's $3,000. So we're going to pick up that $3,000 and subtract that out. I am also going to subtract out the full amount of the $2,000, which is the business expenses, right? So those are direct expenses for the business. That's not some sort of 20% throttle of what we have here for business use of the home. Maintenance, insurance, and utilities, that should go through the 20% throttle as well. All right, and we'll grab our calculator one more time just to make sure that we're not messing up any math. $4,000 times 0.2, that's $800 that I would want to pick up there as well. Okay, so let's do an intermittent calculation here. 6 minus 3 minus 2, that's $1,000. All right, then I'm going to drop my $800 here, which gives me $200 left. So that $200, even though I had $8,000 of depreciation, the $200 is the most because I can only go down to zero. So as a result, D will be our answer.
All right. who got it. Medyo mahirap yun, no? But yeah, yung depreciation cannot further reduce. Yun yung, di ba, kanina demonstrate natin, dapat 5,000 yung kaniyang deduction, but only 2,000 was included in the loss kasi yun yung mortgage component. The others below the mortgage were carry forward to the following year. Okay, continue tayo. Honestly, let's just breeze through statutory employees and non-employees because I have never encountered this thing. So this one is a good to know.
We're going to discuss the critical topic of worker classification. It's essential for business owners to correctly determine whether individuals providing services are employees or independent contractors. So let's break this down. Why is this important? Well, because employers must withhold income taxes and pay Social Security, Medicare, and unemployment taxes for employees. Employers do not generally withhold or pay taxes for independent contractors. Determining the business relationship between the employer and the worker is crucial. We look at a few common law rules. First, behavioral control. Does the company control what the worker does and how they do the job? Next, financial control. Are the business aspects of the worker's job controlled by the employer? So payment, expense, reimbursement, provision of tools. Finally, type of relationship. Are there written contracts or employee type benefits? Will the relationship continue? And is the work a key aspect of the business? Employers must consider all factors to determine worker status. No single factor is decisive. And if unclear, Form SS-8 can be filed with the IRS for an official determination. Let's say a business hires a graphic designer to work on a project and control how and when they work. They may be classified as an employee. If the designer controls their work and uses their own tools, they may be an independent contractor. There are some occupations that are employees as a matter of law, regardless of the analysis. These include drivers distributing beverages or laundry, full-time life insurance sales agents, home workers on supplied materials, and full-time traveling or city salespersons. For these folks, Social Security and Medicare taxes are withheld if services are performed personally, no substantial investment in equipment is made, and services are performed on a continuing basis. So, for example, a full-time life insurance agent selling primarily for one company is a statutory employee. On the other hand, some occupations are specifically not employees. Direct sellers, licensed real estate agents, and companion sitters. These folks are treated as self-employed if payments are related to sales or output and services that are provided under a contract stating they are not employees. Direct sellers are those selling consumer products at home or business locations other than permanent retail establishments. They may also be delivering or distributing newspapers or shopping news. Licensed real estate agents are engaged in appraisal activities for real estate sales, earning income based on sales or output. And then finally, companion sitters provide personal attendance, companionship, or household care services. These folks are treated as self-employed, if not employed by a placement service. All right.
Right. The only thing you need to know about employee, contractor, statutory employee, and statutory non-employee are the tax forms related to that. So alam niyo na pag employee, W4, or W2, right? Pag contractor, 1099 NEC, right? Kapag statutory non-employee, W2 pa din yan, pero walang withholding tax. But merong withholding sa social at saka sa Medicare, right? So merong contribution si business sa half of the Medicare and the social. Tapos statutory employee yon. Statutory non-employee naman, 1099 in EC pa rin yun. Kasi statutory, non-employee, hindi ka mag-withhold, right? And why do you need to know that? Is if you're doing the bookkeeping, yung, di ba, mag-i-issue tayo ng 1099 and W-2 at the end of the year. So you know which ones are subject for 1099 NEC and which ones are subject for W-2. As a tax preparer, why do you need to know? Because of the tax form involved, right? Kapag W-2 yan, of course, lalagay mo sa wages. Kapag 1099 NEC yan, that means you have to create a Schedule C, okay? Which is a self-employment tax form. Right? So yun lang yung premise nun.
That covers this section. Thanks for watching. Which of the following is a statutory employee? All right, so we got to find the statutory employee. Generally, when you're looking for statutory employees, we're trying to look for folks that it would be nearly impossible for them to do their job without having some support or perhaps significant support from the greater business. So we're looking for, are they provided with significant resources to accomplish their task, but they still may have some flexibility around the hours and how they perform their tasks. But it's that investment in assets that really becomes critical. So take a look at A. A person engaged in selling consumer products and homes, and all service payments are for sales, not hours worked. Sounds to me like an independent contractor. Is there a significant investment in what they are selling? It doesn't sound like it, right? I'm not seeing any facts that would say, no, we give them a car, we give them the samples, we give them some mechanism to be able to produce these sales. So I'm not screaming at A. B, a companion sitter who pays the placement service out of the payments from the sitter's client. So this is kind of just a contingent fee on having found the work. There's no provision of assets to facilitate the work. C, a soda beverage distribution driver who performs all the services on a continuing basis for the same payer and does not own any of the equipment. Ah, there it is. So they don't own the equipment. They are getting the equipment from the distributor or perhaps the manufacturer of the soda. So that there we see kind of the shining example of a statutory employee you could do, and you continue to work for that same manufacturer as well. Let's take a look at D just for completeness. A real estate appraiser with earnings based on sales who is contracted as not being an employee. So it sounds like they might have multiple folks going on, multiple clients going on. I'm not seeing any provision of assets to facilitate the job. For me, C is really the best answer, and that is absolutely the answer here in this case. Soda beverage distribution drivers tend to get a specific statutory employee carve-out. According to common law rules, which of the following is not one of the three factors employers must consider when determining whether a worker is an employee or an independent contractor? All right, so the rules are actually pretty straightforward. It is behavioral, financial, and type of relationship. Therefore, influence is the correct answer. That is not one of the three factors that must be considered whether or not somebody is an employee or an independent contractor. Those are rules that I would definitely commit to memory. It is a hot topic, particularly in today's day and age with the gig economy, and making sure that folks aren't misclassified as independent contractors and that they are employees. So at least what I'm seeing in practice, this is definitely one that you're going to want to understand, not just for the exam, but for practice in general to be successful. So behavioral, financial, type of relationship, influence is not one of those three factors.
All right, last one is QBID.
QBID, short for Qualified Business Income Deduction, is a deduction based on certain streams of business income for individual taxpayers. Let's look at some of the finer details. QBID is also called Section 199A and is designed to put individual taxpayers with business income on similar footing to the likely lower corporate tax rate. This is a from AGI deduction, though it is not an itemized deduction, so taxpayers can take the standard deduction and then also have a QBI deduction. Some of the finer points around the limitations of QBID calculation are not covered by the exam, but you definitely need to understand the general calculation. First, we need to know whether the business income is from either a specified trade or business or a qualified trade or business. Generally speaking, a specified service, trade, or business, or SSTB, is one based on the reputation or skill of one or more employees. Most of these businesses require a license of some kind, such as a physician or lawyer, but can also be specialized skills not needing a license, such as a performing artist. Reputation can be substantial as well, such as endorsing a product or appearing on TV with a particular product. Although they likely have a professional license in order to practice, note these businesses here are specifically excluded from the definition of SSTB, so they are our next category, a qualified trade or business. Essentially, any business that is not an SSTB is a qualified trade or business. Of course, don't forget about those 4 special businesses that are statutorily defined as a qualified trade or business. It's important to note the income can come from a flow-through entity and does not have to be direct to the taxpayer on Schedule C. The QBID is 20% of qualified business income, or QBI, but does have another limit, which is 20% of taxable income less net capital gains. There is a 4-step process presented in your GLIME Knowledge Transfer Outline to consider all QBIs for a taxpayer and apply taxable income limits. These limits adjust for inflation each year, so please observe those ranges. The mechanics are the same for each year. However, if a taxpayer is below the range, there is a limitation. If they are in the range, there is some phase-out applied. Finally, if the taxpayer is above the range, no QBID is allowed. The most important items to remember with QBID: what is an SSTB and 20%. Thanks for watching.
Right. So yeah, what is an SSTB and what is, the 20%? Those are the two things you need to remember when determining QBID. So why QBID, if you may wonder? It's because in 2018, when Trump introduced the TCJA, he reduced the corporate tax rate from 35%, was it 35, 32, to I think 21%. So that's for corporate entities like C Corps. And for it to be fair, he then introduced the concept of QBID for Schedule C filers, including pass-through entities, the 1120S and 1065. So that's the premise of why there's QBID. Now let's demonstrate how QBID works in a tax return. So, so it is in 8995. So when you have Schedule C and it's qualified business, then you will likely see a form 8995 on your tax forms, right? So 8995, or the qualified business income deduction. So why do we have this? So as you can see, there is a qualified business income of 10,222. So this is coming from the 11,000 of Schedule C income that we have. So see, we have 11,000 of Schedule C income, correct? Now, why only 10,200 was qualified business income? Because of the self-employment tax, right? Remember, there's 15.3% of self-employment tax for Schedule C, right? Now, you want to know how that Schedule C or the self-employment tax is calculated? Just go to Schedule SE. Schedule SE is Schedule Self-Employment Tax. So see, self-employment tax. So this is how it's calculated. This total self-employment tax is 1,555. So it's not very straightforward, guys. 11,000 multiplied by 15.3%, it doesn't work that way. So 11,000, you have to multiply that by 92.35% because half of the self-employment tax is a business deduction, right? And why is that? Why is half of the self-employment tax a business deduction? Remember that if you are an employer, right, that 50% of the Medicare and the Social Security deduction, Social Security contribution to your employee is a business deduction, right? So that also, to be fair, for Schedule C filers, half of their self-employment tax is also a business deduction, right? So only the 10,159 is really subjected to self-employment tax, right? So 10,159 multiplied by hold on. So 10,159 times 15.3. Sorry. So 1,555, right? This one, that is. Then divided by 2, that is your deductible self-employment tax. So what happens is that employment tax, or one half of the self-employment tax, is deducted against your 11,000 of Schedule C income. So 11,000 minus this amount here, the 778, that is what you will see in the Form 8995, the 10,222. Okay, so the 10,222, multiply that by 20%. That's your qubit deduction right here, 2,044. And where do you see your qubit deduction? That's going to be in your Form 1040. So you will see that over here after the AGI. So line item 11 is your AGI of 94,297. And then you have your standard deduction of 29,200 because this is married filing jointly. So you have your qubit here of 2,044. So now your total deductions is 31,244 against your AGI of 94,297. The taxable income is now down to 63,053. So qubit really helps in reducing the tax, right? So pag wala kayong nakita dito na qubit deduction and there was an income, i-check niyo lang yung Form 8995 for the computation. It could happen, right? It could happen na walang qubit if we do it this way. So kanina, di ba, nag 50,000 tayo for our Schedule C gross receipts. If we reduce that, let's see. No, dito tayo. Let's keep our Schedule C income at 11,000, but let's reduce our wages. So let's reduce our wages to 10,000. Oh my God, my internet is kind of slow. What is wrong with you? Okay. So what happened here? You don't have a qubit, right? Line item 13 is gone. Reason being is that you have a lower AGI against your standard deduction. So effectively, you don't have a taxable income, right? Because your AGI is much lower than your itemized deduction. What if, right? What if your W-2 is somewhere around 25,000? Let's see what happens. And you guys, for you to be familiar with ProConnect, do some simulation, okay? Like after our session, you can, go through the recording and then do the same thing, right? Just so you become familiar with navigating the forms, knowing where to input, because you guys, the way we get a job as a tax preparer is we have to be knowledgeable with the tax forms, right? Kasi may mga ibang employer, nagpapademo talaga sila, right? So here, AGI, wala pa rin siyang qubit. Why is that? So, AGI 8995. Wait. Bakit nag-loss? Kasi loss. Ang pinagtan ko yata.
Chris, can you
Yes,
hear
pa.
me? Because you adjusted the schedule C, not the W2.
I know, right? When I look at it, why is it negative 11,000? My bad. But thank you for spotting, Cherry. So that's, ano nga to? 50,000, right? So let's go back to wages. So wages yung palitan natin to 25 rather than 10,000. So, but it was a good thing. You saw if you have a loss, even if you have an adjusted income or you have an AGI, positive AGI, more than your standard deduction, you still wouldn't get qubit because you are at a loss position for your Schedule C. So let's say this is 25,000. All right, so you have it because you have a positive AGI. All right, so that's how it works, guys, for qubit. Okay, yun yung matatandaan nyo. You don't really need to do the computation because as you know, the tax software does it for you, but you need to understand the numbers, right? You need to understand saan yung mga supporting documents para in case you when you prepare the tax return, you know how to explain that to your taxpayer client, right? And then pwede kayo magpakitang gilas nga whenever you're applying for a job, kahit wala man kayong 1 year, 2 years experience, but when you know how to walk through a client in a tax return, you're likely gonna get hired. Right, so let's continue with our lesson. We're 8:51, so I think we're just right on time.
A taxpayer may not claim the qualified business income or QBI deduction if he or she has qualified business income from which of the following entities?
Okay, answer niyo muna yan, guys. All right, what's your answer? B. Okay, let's see if the answer is B.
So let's see if there's any common thread amongst these four entities to find out which one is kind of the odd one out. S corps, sole proprietorships, trusts. We should be looking at these. That one, and this one, and saying to ourselves, those are not tax-paying entities. Those are flow-through entities, right? So they don't pay tax by themselves. But you know which one does? C corporations. And that's absolutely the correct answer. C corporations would not, any distributions from a C corporation, they're not eligible for QBI. That's a dividend that we would receive from that C corporation. The other three, those are flow-throughs. So sometimes you're just looking for the common connections between the items to kind of help push your way through the exam. So for us here, B's the answer.
All right.
Zachary owns 40% of an S corporation that pays him $70,000 of wages and $10,000 of dividends and allocates him $89,000 of income. What is Zachary's qualified business income? All right, so qualified business income is the income allocated from the flow-through entity. It has nothing to do with wages or the dividends that are allocated or attributable here. It's only the income that's allocated from his proportionate share of the S corporation ownership interest. So don't let these other questions confuse you or second guess you. Be confident in QBI. Qualified business income is only the income that's allocated from the flow-through entity. Those other items, important, taxable, sure, but not QBI. So B's our answer, 89,000.
All right. That wraps up our topic on business deductions. Again, my emphasis lang, guys, is that for business deductions is really very helpful for bookkeepers kasi kayo yung nagde-determine if that's a business deduction or not, right? Ang role natin bilang tax preparers is intindihin kung bakit naging business deduction yon, right? And if we determine that it's not a business deduction, we just make that as we just propose an AGE to the bookkeeper to adjust the books accordingly, okay? Or if we have doubts that may not be a business deduction, then we can ask for supporting documents from the bookkeeper or from the client. But we are not the one recording those generally in the books. So yeah, that's the 5 lessons down, and we are left with 15 more. So we're pretty much on track. We're still pretty much on schedule. And yeah, announcement tomorrow. I won't be around. I will though. There would still be a Kahoot quiz. So I think I will have Kelly conduct that, and then I'm not sure if Cherry or Shawnee would be available. I would recommend that you do the exams, right? In Gleim, or Kelly can also facilitate that if Shawnee and Cherry can't do it. So in each of the lessons, there are review questions, right? And when I was studying for my EA exam, what I did for me to pass the exam was just I watched all the video recording. As you can see, mayroon naman siya mga downloadable items, but I didn't do the PDF anymore. I just watched the videos, and after the video, I just take on the adaptive quiz, right? That's it for me, because the adaptive quiz helped reinforce my understanding of the video materials. And there are also questions that are not necessarily covered by the videos, but are explained by the answers, or even in the wrong answers that I get in the adaptive quiz, right? So this is what I did, right? So I just go and click on start, and then yeah, I take all these questions. So I would recommend that you do it tomorrow to test your understanding, right? As to what level are you. And then, because isa lang ang magna-navigate, what I would recommend you do is i-jot down nyo yung mga correct answers nyo, right? Make it like you're actually taking an exam. Don't copy from others. Like if your answer is A, and everybody's answers in the group chat is B, but you really feel that it's A, then stick with your answer is A, right? Don't look at the chat. Look at the question and then pick your answer, and then honestly assess yourself. Like out of the 20, how many you got correctly, right? Because that's how I did myself as well, right? So there's a timer. It's and this actually is pretty much how the actual exam looks like. Simulation to ng actual exam ng Prometrics. 100 items nga lang yung Prometrics, and also distributed doon sa 20 na study units. And then what I do is that pag hindi ako pumasa sa quiz, hindi muna ako nagpupursue sa second lesson, right? I want to make sure that I hit 80 80 yung pinaka-gatekeeper ko before I proceed to the next topic. And mind you guys, pumasa naman ako. Right? And it also gives you highlight kung saan ka good, right? And then after you review, after you take again the quiz, hindi naman kasi pag inulit mo, hindi siya mag-uulit ng buong 20, hindi siya maulit lahat. Meron, but hindi lahat. And so this is AI driven. So if you're good in one area, let's say for example, sa business entities, naka 3 out of 3 ka na, the moment you retake the quiz or the simulated quiz, you may not get questions on business entities anymore because that means you're already good in that area. So that's the beauty if you have your own Gleim access, right? I don't know how much Gleim is now, but at this point, am I recommending that you invest in Gleim? Maybe not yet, right? Maybe not. Maybe when you are already somehow decided on pursuing the EA exam, okay? Kasi maganda naman siyang resource and, in terms of return of investment, for sure there will be, right? Because look around, look in Upwork, Online Jobs PH, LinkedIn, halos ng mga job descriptions doon na naghahanap ng mga tax preparer are either CPA or EA, right? And then yung EA, mas mahirap na, sobrang hirap nun kumpara sa EA. Mas masyadong achievable yung EA and much less expensive. All right, so time check, 8:59. Ando na tayo ngayon. So thank you guys for tonight. I enjoyed our session today, and thank you for those who did the correction. Please don't get intimidated if you feel like there's something wrong that I am providing you. Wrong answers, I don't care if I'm wrong, right? I really don't care. That's true in life. We make mistakes, we fail, and whatnot. But that's how we also learn, right? No one is perfect in this community, and nobody ever will be, right? So if you feel that there is a thing that needs to be covered, please have that audacity to say it or to put that in the chat. If you are hindi nababasa yung chat question, be persistent, okay? And then tomorrow, Cherry, kaya ba tomorrow? Kaya ni Ma'am Shawnee? Or otherwise, we can talk offline. I'll see if Kelly can do it because I'm traveling tomorrow. Okay?
Yeah. Si mother kasi busy sa work, pero ako, I'm always present naman.
Oh, wow. Good to hear. So Cherry said she can come. So if you guys, all of you can come tomorrow, it would be a great exercise for you guys. So yung buong 1 to 5, pwede nyo i-tackle within the next, within mga 1.5 hours, right? Tagti 20 lang naman per study unit, right? Wouldn't that be exciting, guys? And then I'll see you on Monday. Hopefully I can make an announcement on Saturday on the document that you can input for Schedule C and Schedule E on the tax return para yung mga na-discuss natin na mga business deductions would be simulated on your end. Okay? So that's it for tonight. You guys have a good one. See you Monday. Take care.
Thank you, Chris.
Thank you,
Pleasure.
Chris.
Thank you, Chris. Good night.
Everyone.
Night, night, night.
Recording stopped.
Thank you.
Pleasure. Bye-bye.